We were in a massive bull market in bonds. Well, that's the biggest market that there is other than the derivatives. That's the scariest market that there is, because those are just big unsubstantiated bets. It's not like you can convert them into the underlying asset, and they control everything now. And I've been saying this right along, and I'll say it again, and I'll keep saying it. That's the biggest threat, because those are all just leverage upon leverage upon leverage, which means debt upon debt upon debt upon debt. And when that whole pyramid scheme implodes, you better have your gold and silver, and you better have your food, your water, everything, so that you can be as independent and self-sufficient as possible.
Many investors hold gold and silver to protect themselves against various economic crises. But does this coverage hold up during stock market crashes? Knowing what effect a market crash and subsequent dollar collapse will have on silver and gold is essential for making investment decisions from time to time and deciding what to do in the event of a major recession or depression. It is a common assumption that gold and silver prices will fall along with the market. And if so, wouldn't it be better to wait to buy them until the dust has settled? But let's assume investors are right and your precious metals hold their value, or even increase in value. In times of depression, is it better to have gold or silver? In other words, which one will give you the best chance of weathering the storm? In today's video, we will share why Lynette Zang believes that this is the best time to get gold and silver, as we are close to a worse market crash. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update.
The economy, everything died in 2008. And for most people, I hate to say this, but a lot of people have not recouped or regained all those lost years. And this one's going to be way worse.
You may recall that gold fell during the initial shock of the 2008 financial crisis. This may be why many investors believe that gold will fall when the stock market does. But as the S&P continued to slide, gold rallied, ending the year up 5.5%. In the full 18-month sell-off in the stock market, gold is up more than 25%. Having good money, gold to counteract hyperinflation and maintain your purchasing power so you can transfer wealth however you want, and don't have to go through the extreme poverty, you must take this into account. Globally, central banks are raising interest rates right now to combat the inflation they've created. I mean, they're trying to fight it, but they're doing it at the same time that the world economy is slowing down. And that is going to push us into a hyperinflationary depression. The government wants to spend money, and look what is happening now. We were in a massive bull market for bonds. Well, it's the biggest market out there besides derivatives. It's the scariest market out there because it's just big bets with no basis. It's not like you can convert them into the underlying asset, and they control everything now. You better have your gold and silver, and you better have food, your water, everything, so that you can be as independent and self-sufficient as possible. Public debt levels have increased considerably in all regions during the pandemic. Most countries now have much higher levels of debt than the past. Interest rates were already low in many advanced economies before the COVID-19 crisis, limiting the ability of central banks to lower them further. They tried. They've been through all of these negative rates since 2019, and now because they're raising interest rates so aggressively, they're now at zero. They already saw that lowering them as much as they were doing was not working. It did not stimulate the economy. The economy, everything, died in 2008, and many people did not recover or recovered all those lost years. And this one is going to be much worse. The reason gold tends to be resilient during stock market declines is that the two are negatively correlated. In other words, when one goes up, the other tends to go down. Stocks benefit from economic growth and stability, while gold benefits from economic difficulties and crisis. If the stock market is falling, fear is usually high, and investors generally seek the safe haven of gold. If stocks move and roll, traditional investors' perceived need for gold is low. The lesson here is that even if gold initially goes down during a stock market crash, don't assume it's down for the count. In fact, history says that this could be a great buying opportunity.
Having good money gold to counter the hyperinflation and hold your purchasing power so that you can have the wealth transfer your way and you don't have to go through abject poverty. You got to keep this in mind. I'm thinking it spurred people on to get prepared. I know it did me. That's when I got my bug out house, right? I've been preparing since 2008.
That's all for today. Let us know your views in the comments section below, and don't forget to like this video before leaving. Thanks for watching.